Hey dough rollers, welcome back to the channel. Well, with the end of 2023 fast approaching, I thought we'd go over a end of year financial checklist. It's sort of the things that I run through myself to make sure my finances are in order. I'm not missing anything. I'm actually going to walk through 17 things. I will move through them fairly quickly. I'll include timestamps below the video so you can jump to different topics that are of interest to you. Also, you'll be able to see the checklist all in one place. And I just find the end of the year, of course, you could do this any time of year, but I find sort of the last 6 weeks of the year a good time to do it. I also do a lot of things between Christmas and New Year's. And so it just works for me, and maybe it'll work for you. So let's dive right in. And we're going to start with, at a high level, number one, I call it a tax review. And of course, exactly what you should do will depend on your specific circumstances. But for me, the first thing I think about is itemized deductions versus standard deduction. If you may be right on the line where one makes more sense than the other, one of the things we do is we make our charitable contributions every other year to a donor-advised fund. We usually donate appreciated stock or ETFs. And that way we're sort of alternating. One year we do itemized deductions, then the next year we take the standard deduction. But now's a good time to be thinking about that because you still have some time to make some decisions before the end of the year. If you're at all considering Roth conversions for the year, now's the time to think through that. There are different tools you can use to help you. I like New Retirement, and I'll leave a link below this video to it. But at the end of the day, a lot of the decision comes down to making a bunch of assumptions about future tax rates and your income, but do the best you can. Now's the time to think about a Roth conversion for 2023. And keep in mind that at least under current law, rates are going to jump back up in a couple of years. So this may actually be a good window of opportunity to do some Roth conversions, if that makes sense. The other thing to think about is if you have an HSA account, if you maxed out your contributions, you may be making them through your employer and your paychecks each month, or you may be making them on your own, but you want to make sure you're maxing out your HSA contributions. Again, a lot of other tax issues. We'll talk some more about those with retirement accounts. But checklist one: do you need to make any moves now before the end of the year for taxes? Number two, and it is related, is maximizing your retirement contributions. Whether it's a 401k or other workplace retirement account, maybe you have an IRA. Some things to keep in mind. One, if you're 50 or older, I like to say 50 or better, catch-up contributions. Have you made those? Are you planning to? And then also, have you considered a backdoor Roth IRA where maybe you don't qualify to make contributions directly to a Roth, but you can make after tax contributions that are not going to be deducted because maybe you don't qualify for that either, to a traditional IRA. And then once you do that, you move it over to a Roth. You want to make sure you follow the rules, and there are a lot of them, but now's the time to be thinking about a backdoor Roth IRA, if that makes sense for you, before the end of the year. All right, number three, also tax related, and that's taking your required minimum distribution. And it doesn't only apply to folks that reach the RMD age, and that's been changing. It's 73 now, we'll go up to 75 in a decade, but you may have inherited an IRA. I have a small inherited IRA, and I have to take an RMD every year. Now, in my case, my broker calculates that for me and moves the money into my checking account for me. You may or may not have that set up. I think it's good to do if your broker offers it. But even if they do, you want to make sure they're doing it, and you want to make sure you've taken that RMD. Penalties can be harsh if you miss them. All right, number four, if you're saving for a child's education, have you made your 529 contributions for the year? We just made ours for our granddaughter, and you may get some tax benefits at the state income tax level, depending on where you live, but you want to make sure you get those 529 contributions in before the end of the year. So all of those have tax issues related to them. The next one isn't specific to taxes, but it's to do a quick evaluation of your investments, and it doesn't have to be anything complicated. I like to check at least two things. The first is the fees that I'm paying. It's amazing to me when I talk to people and I say, what are you invested in your 401k? First of all, some don't even know. So if you don't even know what you're invested in, that's step one. Get the ticker symbol. If it's a mutual fund, it's going to be 5 letters. If it's an ETF, it's typically 3, maybe 4. And look at the fees. And if you don't know how to do that, ask your administrator at your 401k, or if you have an IRA at Fidelity or Vanguard, call them up and ask them. They'll show you how to do it. It's not complicated. But check your fees, and then also check your overall asset allocation. How much do you have in stocks? How much do you have in bonds? Within stocks, do you have U.S. stocks, international stocks, large companies, small companies? You want to make sure you at least understand your asset allocation and where you are. There are tools you can use to do this for free. Empower is probably the one I recommend the most. I'll leave a link to it below this video. You can also just do it on your own. I even have a spreadsheet that I use that I make available, and I'll leave a link to that as well. It's a Google Sheet that you can use if you want. But you want to make sure you know what you're invested in, what the fees are, and what your asset allocation is. All right, number 6, kind of going back to taxes for a minute. You want to at least consider, are there any capital gains or losses that you should be taking this year? Now, a capital loss, maybe you've got an investment that's lost some money, but you want to lock that loss in for tax purposes. You can always either immediately invest in something different, similar but different. You don't want to invest in the same thing because you have this wash sales rule that can eliminate your tax loss. Or you could wait just more than 30 days and then put the money back in. But you can lock in that loss that you can use either this year or in later years to offset gains. And you can also deduct up to $3,000 from your ordinary income for any losses. Some of you might actually want to take capital gains. Why would you want to do that? Well, maybe because of your taxes this year, you're in the 0% capital gains tax bracket. Take advantage of that. Lock in some gains at 0% if that applies to you. All right, that was number 6. Now we're jumping to number 7. And this is really important. You should do it once a year at a minimum. Check your credit score and report. I use Experian. I'll leave a link. Actually, I can show you real quick. I have a resource here where you can check out different options to get your credit score for free. Some of them are official FICO scores. Some of them aren't, but even though they sometimes call them FACO, I think they're really useful. It'll show you what your score is. It may not be the FICO model, but it'll give you a good indication of where you stand, what's helping your score, what's hurting your score. That's the kind of thing you get from Credit Karma. You can pay a relatively small fee. I personally wouldn't sign up for a monthly fee that I continued for a long period of time. Sign up if you want, get all your information from all 3 credit bureaus, and then I'd cancel it. Maybe pay for a month, but do that. I wouldn't pay month to month. And by the way, a lot of credit card companies now give you your credit score. It's not always a FICO score. Sometimes it is, but they give that to you for free and offer monitoring where they'll alert you if there's been some changes to your credit report, like a new account or whatnot. So however you do it, there's a lot of ways to do this, but you really need to review your credit score and report at least once a year. Number 8. I would take a look at your budget on an annual basis. I think we're so used to budgeting month to month, and that makes a lot of sense. But sometimes it's good to sort of step back and say, okay, how much money have I spent in 2023? And it may surprise you. You may, particularly with items that don't come up every single month. You may look at your budget and say, I spent how much on gifts? I have no idea, but birthdays, anniversaries, it all adds up. So I like to look at our budget on an annual basis, and I think the end of the year is a good time to do that. And it can also help you plan for next year's budget. Maybe you need to adjust some of your categories. Maybe you're spending more or less in some categories, and you can make those adjustments in whatever budgeting software you use. All right, number 9, so important. You want to check the beneficiaries on all of your accounts. That's important for whether they're taxable accounts, who's your beneficiary for your 401k or other workplace retirement account, your IRAs. Really, really important. And even though I know I've set the beneficiaries on all my accounts, I still go in every year and check. It's like, I don't know, maybe something happened with my broker and they no longer saved the beneficiary I chose or that my wife chose. So I go in and look at that every single year. Really important. Number 10, if you have a flexible spending account, you want to make sure you use it. Unlike an HSA, where it rolls over from year to year and you can save it for decades if you want, an FSA, you've got to use it or you lose it. Now, you typically have into the early of next year, but from planning purposes, I think it's a good time now to say, okay, what do I have in that account and how am I going to use it? Now's the time to think about that. That's number 10. Number 11, I think it's a really good time to review all your debt. And so what I did when we had debt, we don't have any debt now, but we did. We had plenty of car loans, school loans, credit card debt. I've been through it all. I would just keep a simple spreadsheet. Each item, what's my debt, what's the current balance, what's my minimum monthly payment, what are the interest rates? And I think it's good to look at that at least once a year. One of the things that you can do is say, okay, am I paying interest rates that I can lower? I can refinance that debt. I can put it onto a 0% balance transfer credit card, which we did a lot when we were getting out of debt. Or maybe you can just refinance. Maybe you've got a car loan that you can refinance. Now, unfortunately, rates have gone up over the last year, so that may or may not be an option. But still, I think it's a good idea to look at all of your debt in one place, even if it's painful. And I've been there. And figure out, okay, here's where I stand. What do I want to? How do I want to tackle this debt going forward in 2024? And can I reduce my interest rates on any of the debt? So that's number 11. Number 12, I think it's a good idea to review all of your insurance policies. We don't have life insurance anymore. We just don't need it at our stage in life, but we did for a long time. I think it's good to look at the benefit amount. Maybe you have term life insurance and you need more of it, or maybe you need less. You don't need all that you have because circumstances have changed. I also like to look, at the premiums. What am I paying for homeowners, car insurance? We have an umbrella policy. And if it makes sense, maybe you get quotes to some comparison shopping. I don't, frankly, do that every year. I have a good idea of I know what we're paying, and I have a good idea of what the competition would be. But I think if once a year, if not maybe every other year, it's worth getting quotes. It doesn't take very long. You can do it online, and maybe you can save some money with a different insurance company. All right, number 13. It's I think a good idea to at least maybe think about the credit cards you're using, particularly if you're trying to get good cash back or travel rewards. We've got our system in place, and I'm pretty happy with it. I use a Bank of America credit card because we get about 2.65% back on every purchase. That does require accounts at Bank of America and or Merrill, their brokerage, and you have to have at least $100,000 to get that payout. But there are other options. You can get 2.5% or 2%, certainly on every purchase. So, it's kind of free money, and I think it's worth getting if you can. So it might be time to review what credit cards you're using. I'll link to a couple of resources for good rewards cards. All right. Number 14, kind of related, is check your savings account rates. For your emergency fund or other savings, are you earning a good rate? I can show you on savings accounts, the top rate's over 5% now, and we have a lot of options here. Some of these have some limits, like this first one does. It's up to only 40,000, and it's only a mobile app. You can't look at this on your desktop. So to keep that in mind. But even ones that don't have that limitation, here's 540, 535, 535. The bigger banks that pay a good rate, here's UFB Direct, 525. If you come down to things like Discover and American Express, you're usually in the 4%. Here's CIT Bank at 465, PNC at 465. So you can get some good rates, maybe not the top. But the real issue, I think, is to make sure you're not getting 0.01% at some national bank. You don't want to keep your money in that kind of account. So just make sure you're getting, you don't necessarily have to get the absolute best rate. I don't have the top rate, even as listed on my own website, but I have a good rate. And so I think that's important. All right, number 15, this is a perfect time. I tend to do it a little closer to the end of the year, usually between Christmas and New Year's, but update your net worth statement. You want to track your net worth. It's the ultimate scorecard. It reflects, for better or worse, every financial decision we've ever made in life, right? Because if we spent the money, well, it's gone and it's not on our net worth statement anymore. If we've saved it, invested it, it is, and how well those investments perform show up on the net worth statement as well. I tend to keep mine simple. I don't include personal possessions. I don't even include our cars. I include all our investments in cash, and then for us, I include our home, and that's it. On the asset side, of course, liabilities, pretty straightforward. What money do you owe people? Mortgages, car loans, student loans, and so on, and then the difference. But I think it's really important to update it. We've tracked our net worth for years now. I can see it, the trends, hopefully going up, sometimes going down if the market's not doing so well. But now's a good time to update your net worth statement. And I'll leave a link to some tools you can use to do that if that's of interest to you. All right, related to tools is number 16. I think it's a good idea to take stock of the financial tools you're using for a couple of reasons. The first is, are they working for you? Whether it's your budgeting app, the tools you use to track your investments. Maybe if you're closer to retirement or in retirement, you have a retirement planning tool. Are you getting what you need from those tools? As you probably know, Mint.com is closing, so that's forcing a lot of folks to find a new budgeting app. And if you used it for investment tracking, a new investment tracking app, I'll leave a link to options for you. But that's the first thing. The second thing is, have you connected your accounts to certain tools that you're no longer using? And if you are, you really want to disconnect those accounts and close down your account. And I find myself, partly because I review so many of these tools, but I'll stumble upon a tool that I hadn't thought about for a year, and I realize I can log in because I have an account with them. And when I do, I have my checking account connected to it. Forgot about that. So if that's you, you're not using a financial tool anymore, make sure you disconnect any accounts you've connected. It's just a good practice. You want as few of your accounts connected to as few tools as you can, in my view. All right. The 17th and final one is to update what I call the blue binder. I call it a blue binder because my binder happens to be blue. But for me, it's a binder that includes all the information my wife or other loved ones would need should I, pass away. It includes that net worth statement that I just talked about. It includes a printout from each account that we have that just shows what we have. It includes, copies of wills and medical directives and power of attorneys and that sort of thing. If you have a 529 set up for your kids or grandchildren, it would include that information. It's really sort of a roadmap to your finances if something should happen to you, because particularly with couples, a lot of times one person's sort of involved in the finances and the other one doesn't even want to think about it. And that's not always the case, but I think that's fairly common. And so I think that blue binder can help. One of the things I'm going to be doing before the end of the year is actually creating videos where I put up on the screen our net worth statement. I walk my wife through everything. You can use a tool like Loom to record your screen, and of course, it'll record audio. I use a tool called Snagit. But I think it could be a good way to, beyond just paper and a binder, you can record a series of videos. I'm going to do that also because of the business, so I can walk through the business so they understand the business is something should happen to me. I can save those down to a thumb drive. You can secure it with a password if you want, but keep that perhaps with the blue binder. I think that can be a very, very useful should something happen. And it might not even be that you pass away. Maybe you have some medical issues and aren't able to manage the finances, and the blue binder could come in handy there as well. So there you go. Those are my sort of 17 checklist items for the year-end financial update. If I've missed things, and I'm sure I have, let me know. Leave a comment below the video with some other things that we should be thinking about as 2023 comes to a close. Well, there you go. Hope this has been helpful to you. And until next time, remember, the best thing money can buy is financial freedom.